Right. Uh, Ladies and gentlemen, and distinguished guests, members, and colleagues and friends, my name is Muhannad Khalid, and I'm very pleased to be introducing this session and welcoming you all on behalf of the British Egyptian Business Association, and which is BEBA, of course, and also on behalf of the Egyptian British Chamber of Commerce, EBCC. Uh, it's quite interesting to introduce such an event because to me, I must say it's a very unique one. I can't recall attending or witnessing an event with such a subject. It's very unique, it's very specialized, and it's which is of course discussing the possible partnership for promoting, between UK and Egypt for promoting sustainable manufacturing in Africa. And a lot of that will be concentrating also on the area of project finance and how to raise financing for such projects. Um, we must not forget that our great sponsors that made this event happen. And on this note, I would like to thank the Cairo Regional Center for International Commercial Arbitration for being one of our sponsors. And it's represented today by its director, Mr. and Dr. Ismail Salim, which is also going to be and who kindly accepted to be the moderator for such a unique session. So thank you, Dr. Ismail, for this being a sponsor and for being, of course, the moderator for today's session. But also, we also have another sponsor, a very prominent sponsor as well, which is a Export Credit Guarantee of Egypt. Again, represented here by Mr. Mohammed Hamdan, who accepted to be a speaker on today's panel. So thank you, Mr. Mohammed, for your organization, for sponsoring this event and for being with us today as a speaker. But we also have great panelists on this panel. Mrs. Michelle D, who is the regional head for Africa from the UK Export Finance. Welcome, Ms. D, for being with us today. And Oliver Phillips, who's Associate Director from Standard Chartered, of course. Actually, it's a great pleasure having you all. And I also welcome the guests that just came in while I was doing the introduction. Without further ado, I will be leaving the floor to Dr. Ismail to do the real part of this event and do the remainder of this introduction, of course, and moderate the session between the panelist speakers. But before I leave, I would like to convey on behalf of BEBA and EBCC our season greetings, since this event comes right before the Western Easter. So happy Easter to all of you. And of course, right after that, Ramadan is approaching. So Ramadan Kareem to you as well. Dr. Ismail, thank you for being with us and for taking the hardest job of this. And good luck, and wish you all a successful event and a fruitful one. Thank you. Dr. Ismail, the floor is yours.
Thank you very much, Mr. Khalid, for your very kind introduction. Ladies and gentlemen, distinguished panelists and distinguished participants, it is a pleasure and honor to moderate this roundtable discussion on raising finance for manufacturing projects in Africa. I have been allowed by the organizers, to which I'm very thankful, BEBA and the Egyptian British Chamber of Commerce, to start with a short introduction prior to giving the floor to the distinguished speakers. As you may have witnessed in the past, when you open the news 20 years ago and watch the news 20 years ago, you would see when you watch the news of sub-Saharan Africa that there was some events of instability and sometimes civil wars. And when you used to watch the news 10 years ago about North Africa, you would see what was called the Arab Spring, accompanied with some instability. Now, when you open the news, you watch the news and you explore what has been mentioned about Africa, all Africa, including Egypt, North Africa, and Sub-Saharan Africa, you will see a lot of discussions about development and renewables and opportunities for economic growth that the African continent has witnessed. From here comes the importance of this opportunity for British traders and investors to have a closer look to the African continent, perhaps including through Egypt as the gateway to Africa, especially with the entry into force of the African Continental Free Trade Area Agreement at the beginning of this year, which is the biggest economic bloc and the biggest free trade area zone after the WTO. I would also be honored to give a short presentation of 1 or 2 minutes of the organization that I direct. I am the director of the Cairo Regional Center for International Commercial Arbitration, which is the oldest arbitral institution in the region and on the African continent. And we have celebrated 2 years ago our 40th anniversary. We have been established by virtue of an agreement between the Asian African Legal Consultative Organization, which is an organization based in New Delhi since 1956, and by virtue of an agreement in 1979, it has established the Cairo Regional Center for International Commercial Arbitration as a non-governmental organization, which with the aim of administrating arbitration proceedings. And throughout our 40 years of existence, we have administered, according to the UNCITRAL rules, more than 1,500 cases, including international cases. Now I'm happy, after this short presentation, to give the floor to our first speaker, which is Ms. Michelle D, the Regional Head for Africa, UK Export Finance, UKEF. And may I present the speaker. So Michelle is a Regional Head at UK Export Finance, where she leads the international business development of the department in Africa, Europe, and South Asia. She joined UKEF in 2017 as head of the renewables and high-tech branch before moving to her current position in 2019. Before joining UKEF, Michelle spent 2 years as a corporate finance advisor for the Business, Energy and Infrastructure Department. Her role led to advise the International Climate Fund in their investment strategy, as well as to provide advice to the department with regards to the UK renewable energy markets. Prior to joining the civil service, Michelle had pursued a career in banking where she held project finance positions in KCB, Lloyds and Barclays. This gave her the opportunity to finance landmark projects in various sectors, including energy and economic infrastructure. Michelle, you will have the floor for no more than 70 minutes, please. 7 minutes, please. So to give the opportunity to the other panelists and the participants to ask you questions. You have the floor, Michelle.
Thank you very much, Ismail, and thank you very much for having me today. Good morning or good afternoon, everyone. So UK Export Finance is the UK Export Credit Agency, and as such our role is to support trade, more particularly exports from the UK. We are a government department, and as such our products or guarantee products, most of them bear the weight of UK Treasury. So our mission statement, if you like, is to make sure that no viable exports fail for lack of finance or insurance, and our products are therefore financial in nature, and support and are basically twofold. Some products support the UK exporters by providing them with working capital. But I think the second types of product, and probably more relevant for our discussion today, are the products where we provide financial support to the buyers of to the overseas buyers of UK products or services. These buyers being either sovereign entity, commercial entities based overseas, or projects procuring from the UK. Our standard product is a guarantee product. We can also provide direct lending on a case-by-case basis. UKEF is very active in Africa. It's a very important market for us. And last year we provided financial support worth in excess of 600 million sterling to a variety of projects, ranging from water purification or hospitals in Ghana to road projects in Benin. And all these projects now benefit from UK expertise and attractive commercial terms that UK Export Finance was able to provide. As an example of what we can do, earlier this year, we financed a mega project for us, 1.7 billion pounds, to build 2 monorail lines through Central Cairo. This is a record transaction for us. We're very proud of it. And it will see the rolling stock made in Derby in the UK support a very important project in Cairo, and hopefully contribute to alleviate pollution and congestion in the city. We are active in all sectors, and clean growth and therefore transports, our electric transports are extremely important to us, in line with UK government policy, which is to reach net zero by 2050. I wanted to mention that UK Export Finance benefits from a local network in Africa. We have executives based in Western Africa, in Ghana, Southern Africa, in South Africa, and in Nairobi. And I'm very happy to report that we will be hiring our next international finance executive to be based in Cairo, and it should start in a couple of months, hopefully. And finally, UK Export Finance offers flexibility, the types of financing that we can offer, corporate, sovereign, but also more structured types of financing, which we are happy to explore, so project finance or PPP type projects. And I mentioned the fact that we are keen on clean growth, and obviously to encourage our exporters also to work and to promote the Sustainable Development Goals. So I will end here, and I'm looking forward to your questions. Thank you very much.
Thank you very much, Michelle. And now it's a pleasure to present Oliver Phillips, who is an Associate Director, Sustainable Finance Africa and the Middle East, Standard Chartered. Oliver Phillips is part of Standard Chartered's dedicated sustainable finance team. He is based in Dubai and covers Africa and the Middle East. He has been with the team since it was created, previously working out of London. In his role, he works with clients to structure sustainable finance solutions that deliver on their key financing requirements, while allowing them to highlight and further support their sustainability objectives. He also advises clients on key sustainability trends, as well as how to put in place the internal strategy and governance needed to ensure that international best practices are met. In particular, he helps clients to identify the elements of their sustainability agenda that they can either raise financing for or link into the terms of their fund. He has been involved in a number of innovative and world-first transactions and product launches. Most recently, Etihad Airways' inaugural $600 million transaction, Sukuk, and Standard Chartered Islamic Sustainable Deposits. Oliver contributes actively to the regional debate around sustainable finance and is a member of Dubai Sustainable Finance Working Group, covered by DFM and DIFC and ADGM's consultative working group on sustainable finance. Oliver, you have the floor for 7 minutes.
Thank you very much, and thank you for the introduction. It's great to be here and speaking on this event, and look forward to engaging with the audience in due course for, I'm sure, a lively discussion. So I think this is a great topic to be speaking about today, because for us, and as you might tell from what I do, sustainable finance is a core focus for Standard Chartered. And is now kind of one of our strategic pillars and really defines almost everything that we do. And we've set some targets, for example, $35 billion of financing towards renewables, 40 billion of project financing just to sustainable infrastructure. So something that we are very kind of keen to pursue, and something we really view as crucial. And in particular in Africa, which is a region where we have an incredibly long history, and I think a history that for an international bank like us is fairly unusual, but it's one that as a bank we are very proud of and very dedicated to. We opened our first branch on the continent more than 150 years ago. We're now present in I think more than 15 countries. We're active in more than 36. So a very well established presence for us in Africa, and it's something that is particularly key to me and a key part of my focus. And I think this is partly because I see a huge opportunity for sustainability and sustainable finance and sustainable projects to take off in Africa, especially as we start to think about a sort of green recovery, as we respond to the devastating pandemic that has kind of turned all of our lives upside down over the last year or so. And this idea of a green recovery is something we see a lot of rhetoric from politicians around, but we're also starting to see the action on the ground from those local companies in Africa who are spotting these opportunities. And I think Egypt is an excellent example of this, with the amazing work that's been happening in the renewable energy space, and a very strong commitment to doing more of that in particular. But there's also a significant gap, which I think for the sustainability that we need to achieve in Africa, and I think that helps to emphasize this opportunity. Only 10% of the United Nations Sustainable Development Goals are financed in Africa. That compares to 90% in developed markets and 60% in the rest of emerging markets. So as you can see from that, there is a significant amount of work that needs to be done. The good news is that lots of sustainable projects are already being funded in Africa. Michelle mentioned some projects in Egypt, and the UKEF has been instrumental in driving a lot of the infrastructure projects alongside many of the other ECAs, the export credit agencies out there. And the good thing is that pretty much all sustainable infrastructure in Africa is, or pretty much all infrastructure financing, is sustainable, outside, of course, the fossil fuel in the power sector. And it's great that we as a bank are proud to have been involved in some transactions. Most recently, one that I think we're really proud of is the Standard Gauge Railway in Tanzania, which is a great sort of rail project, really showing clean transportation and the role that can have. And I think, renewable energy is obviously another area that we see a lot of opportunity for. And I'm sure for many people listening, it's the key one that there's a lot of potential for growth in for the continent. Utility scale kind of project finance hasn't really ticked up in the way that it might have done, for example, in the Middle East, but we are starting to see some interest there from some markets, and particularly a positive kind of development in South Africa with a kind of recent auction and award of contracts. But I think the most exciting area for me is on that smaller scale, and I spend a lot of time speaking to particularly manufacturers who are on the continent, and they're looking at ways they can green their operations. They might see this as something that is cost driven. Renewables are actually now more cost competitive than fossil fuel power in a lot of cases, but also often more reliable than grids, which can be particularly challenging on the continent. But also that they're seeing this kind of this push from their European and other developed market buyers who are increasingly more focused on this. So recognize this is a great way to show their kind of green credentials and help support their business through that. And I think the pandemic really threw this into sharper focus, because actually sustainability is not just about green, and the fact this is called sustainable manufacturing, this event, and it's not just about green but also about the social side of things too. And understanding that latter bit, and in fact the full ESG spectrum, makes you as a company more resilient to withstanding those once in a lifetime black swans that seem to be coming more and more frequently, and I'm sure will only do so if we continue to kind of act as we have been and leave the climate challenge unchecked. But if there was one silver lining from the pandemic, it was that actually we saw manufacturing companies in Africa taking the opportunity to adapt to a new economy. An example that's particularly close to my heart is a company called Casapreco in Ghana. They're a drinks company that saw an opportunity to use their existing facilities to start producing hand sanitizer right back in March, April time last year, when the pandemic had barely even hit Africa, but they recognized there was going to be a significant demand for these products on the continent. And Standard Chartered was able to fund them, and delighted to have been able to do so through our $1 billion facility that we launched to provide at-cost financing for those companies that are producing goods and services to tackle the pandemic. And the $7.4 million loan that we provided, a very small facility really, actually allowed them to start producing 200,000 bottles of hand sanitizer per day. I'm sure you can think about the impact that can have when we all know that how crucial that has played during the pandemic. So this really shows that African manufacturing companies can innovate, they can lead to produce kind of world-class products, but they do need the support to finance it. And this isn't just about these large-scale project financings, the headline-grabbing transactions, but finding those ways to support smaller projects, using every tool at our disposal. Blended finance, ECAs, anything that we can do. But most importantly, it's this commitment from the financial industry to support the sustainable transition and be part of this new economy that we're moving to. So it's great to be here today, and look forward to answering your questions shortly.
Thank you very much, Oliver. It was very interesting, and that you have also tackled project finance during the pandemic. Thank you very much. Now I will give the floor to Mohammed Hamdan. Mohammed Hamdan, the CRO at Export Credit Guarantee of Egypt, ECGE. Mohammed Hamdan assumes the role of Chief Risk Officer at EGE and joined EGE during its restructuring phase. Mohammed enjoys a vast experience in banking and financial institutions, where he worked with several local and global financial institutions and has extensive background in structured and project finance. He is a GUC, the German University of Egypt, alumni and an accredited business consultant. Mohammed has undergone several local and international training programs, which have added to his technical and managerial skills. I give the floor now to Mohammed.
Thank you, Dr. Ismail, for the introduction, and thank you everyone for attending the session. Thank you, Oliver. Thank you, Michelle, for your words. Please allow me to introduce first EGE, which is the Export Credit Agency of Egypt. At EGE, we are mandated to support any Egyptian interest or Egyptian product. We are great and happy to be in such event with you, discussing ways of cooperating with other stakeholders to be able to bring British investments in Africa, especially. Integrating UK interests through expanding its scope of trade and manufacturing in Africa has several possible avenues. Such expansion could take place either through setting up a regional office in Egypt from which to trade within the African market, or by trading directly within the Egyptian market with counterparties. Guarantee products offered by EGE are well suited to serve both scenarios in an equally efficient and profitable manner. Sometimes interests may dictate the establishment of a regional office in Egypt with the purpose of penetrating the African market through Egypt. And in that case, EGE, acting as the ECA of Egypt, would be in a prime position to serve that entity through offering its wide range of products by covering and significantly reducing the elevated risk profile of most African markets. Should the interest of the UK businesses favor operating with the Egyptian market and with Egyptian counterparties directly, as mentioned earlier, EGE also remains a robust partner on which to rely for significantly reducing the overall risk profile of any potential transaction and potential project whose risks remain relatively higher than the ones in the British and the European markets. Utilizing EGE products allows the UK businesses to significantly reduce both commercial and political risks, and thus elevating the overall risk appetite on the back of more secure transactions and leading to opening up more avenues for more potential transactions. This can lower the risk profile by placing business opportunities in a more favorable position to acquire and also be able to raise funding that was previously difficult to access. So how can such entities benefit from the key products provided by EGE? First, they can decrease their commercial and political risks, including but not limited to, of course, the non-payment risks, the insolvency risks for both public and private entities. They can also secure themselves against the unfair calling of bonds. And of course, they can also use and issue surety bonds directly from EGE. Again, EGE, acting as the ECA of Egypt, has a team that is fully dedicated and specialized in project finance transactions, such as greenfield projects that we have been witnessing a lot of them in Egypt in the past years, given the significant growth in the renewable projects. And this team is dedicated and specialized in the Egyptian as well as the African markets. EGE, of course, is willing to bear the ultimate risk of such transactions and is willing to cooperate with the UK ECA as well, indirectly through corporations together. I'll be happy to answer all your questions in that matter, and I give you back the floor, Dr. Ismail. Thank you so much.
Thank you very much, Mohammed, and thank you very much for the three distinguished speakers and for their informative speeches. Now, I would like to give the floor to our participants and invite them to interact with the speakers and to ask questions.
Hello, everyone. It's very nice to meet you. May I please ask a question?
Yes, and please introduce yourself.
Yes, sure.
Ask your question.
Sure. My name is Hussein Heba. I'm a managing partner of a company called FICE here in Egypt, First for Industrial and Energy Services. And what we do is we engage in investments in industrial petrochemical manufacturing projects. And we also provide consultancy and advisory services for our clients as well. So we do both.
And are you operating in Egypt only or in all Africa?
We are operating in Egypt. However, we do have some projects that we are working on in Africa as well. Okay.
Yes.
And I think it was very interesting to be a part of this discussion. A big portion of what we do is obviously project finance, and ECA covered financing is also very, very important. We tend to look at the sourcing of where the materials and the equipments come from in order to finance properly. And it's very interesting to hear about the issue of sustainability and how the banking sector and the ECAs would like to support sustainable projects. So in this regard, I would like to ask, if we are working on sustainable renewable energies, environmental projects, alternative sources of energy, what kinds of products or facilities that can be offered to encourage such investments in terms of cost of financing and in terms of tenure and all of this?
So your question is addressed to the three panelists, I understand.
I would suggest, of course, UKEF and Standard Chartered, obviously the bank, and obviously the Egyptian Export Credit Agency. Would like to hear their opinion on how their products and facilities can support such initiatives, because as you know, sustainable energy might be an expensive sort of initial cost, but we'd like to know how the banking sector would be able to help in this regard.
Thank you.
Thank you.
Okay, so in answering your questions, I would say ladies first. So I give the floor to Michelle, and followed by Oliver, and then Mohammed. Thank
you very much, and thank you for the question. Yeah, so the products that UK Export Finance provides are debt products, and in terms of financing sustainable projects or green energy projects, we have basically two main tools, I suppose, available to us. The standard one, if you like, is a guarantee product. So where we do provide an on-demand guarantee to a bank who will in turn lend to the project. The advantage being that our guarantees on demand 100% cover, so the bank takes the risk on us and not on the project, and that will be reflected in the conditions. The other type of products that we can use for clean growth products or projects, as we call them, is actually direct lending. So that's where we do funds directly out of our own treasury or out of the UK Treasury. We fund the project or a portion of the project. The advantage being that the costs of this lending is in line with the SERV rates, and it's a fixed interest rate over the maturity of the loan. So at the moment, at least, it is. I suppose quite advantageous. However, this is a product that we use on a case-by-case basis, and very often use it mixed with our guarantee type products. But this is definitely something, a tool, if you like, more particularly for for clean growth projects. And the final thing I would say is that under the OECD terms, which as an OECD credit agency, we have to, we are bound by, we can provide long-term financing or longer-term financing for renewables types projects. So that's up to 18 years repayment, which again can be quite an advantage for these types of projects. So I think that's all for me. Thank you for the question.
Excellent, thank you.
Thank you. So Oliver, you have the floor.
Yeah, thank you, and a great question. And I think it's one that we grapple with a lot because, as I mentioned, while, for example, the Middle East has kind of erupted from a sort of sustainable finance, renewable finance point of view, it hasn't come over to, particularly for sub-Saharan Africa. Northern Africa, I think there's Egypt in particular, we've seen a bit more, but still maybe not quite at the same scale. And I think one of the challenges that we face is really how do you match up kind of the fact that you've got potentially quite long maturities for these projects. Looking at, I guess, typically you're going to be wanting sort of quite a few years for your financing, given how long it's going to take to develop the project and then how long for it to be operating. So being able to kind of work out, well, what can you do to really innovate on that? And I think one of the structures that we've seen quite sort of innovatively is the mini perm type of financing. So effectively, what you're looking at here is ways that you're kind of typically shortening the kind of the initial maturity. So turning it from something that might be a 15-year financing to maybe 4 to 7 years, where effectively if you don't refinance it by that point, your margin then starts to increase more and more. Now, what this means is that actually as a developer, you can get kind of lower sort of margin financing at the start so that it can produce a more competitive bid. Although you do then have to kind of balance that out against the fact that, you've got a refinancing risk because you're going to be refinancing in 4 to 7 years. But we found that that's been a way to really help kind of get some of these structures over the line. And that's the sort of soft mini perm structure there. And the important thing is that actually, there's no kind of, event of default if you don't refinance it. It's just that the margin increases. But you also have the kind of other structures, a hard mini perm, which does have that, which we've seen much less of, as you can imagine. It's got the event of default in it. So I think really this is kind of there are two things for me. One is, what can you do in terms of innovating on these structures? Can you get some of these types of structures to work? And two, where can you bring in the likes of the ECAs? And that's right. So great to have two excellent speakers with me today who can represent this view, because bringing in those things that help to de-risk these transactions for banks helps us to then be able to provide financing at better terms, which is obviously key to helping this sector kind of grow exponentially.
Thank you, Oliver. Appreciate it.
Thank you, Oliver. Now, Mohammed.
Thank you, Dr. Ismail. So at EGE, we offer credit insurance and guarantees products, and we have a wide range of products to offer. These products can be issued directly to companies or to financial institutions to support and make those transactions more favorable for all financial institutions, whether local or international ones. We have engaged in several similar transactions, and we are happy to cooperate with the UK ECA or international banks such as Standard Chartered, of course, to support such projects. Of course, obviously, we see the long tenors and the sensitive industries in which we've been seeing lots of projects locally and, of course, in Africa, made by several Egyptian companies. And we would be happy to support such projects again. Thank you.
Thank you. Appreciate it.
Thank you very much. Do we have another question from the panelists? No more questions? So may I ask, until we get some other questions from each panelist, about how last year, the year of the pandemic, 2020, was different from every previous year, the challenges that you have faced, your role to support traders and investors and exporters during this difficult year, and how do you see 2021 and the future versus what we have been through last year, throughout last year? Who would like to start answering? Shall I say ladies first? Of course. Okay. So Michelle.
Yeah, that's absolutely fine. Thank you, Ismail. So yeah, the pandemic, I think the important point for us as an export credit agency is that our role is at the end of the day anti-cyclical. So when there's plenty of liquidity on the markets and deals are being made, at the end of the day we don't really need it. When we are needed are in times of crisis, where our guarantee will really support some projects taking place without the support that UKEF and others can offer. A lot of these projects probably couldn't happen. I suppose from a business point of view, we've been extremely busy during the pandemic, and we still are, exactly for these reasons that we are anti-cyclical. We see a lot of projects still happening in Africa, and I suppose at the end of the day, what might happen in the next year or so might be that some of the biggest infrastructure projects might be delayed. So it might take a little bit of time for these projects to come back, basically. But yeah, still extremely busy, and this is really at the heart, I suppose, of what export credit agencies are for in terms of crisis. Thank you.
Michelle, Oliver, I know you have talked about what you have done during the pandemic, what has Standard Chartered done during the pandemic, or some of your actions, but it would be interesting also to enlighten us with some challenges that you might have faced.
Yeah, I think the obvious challenge for all of us was this kind of shift to virtual. Personally, I moved from London to Dubai in March last year. I think about 4 days before we went into lockdown, which was obviously a little bit of a challenge. But I think from speaking to my colleagues who are sort of dedicated towards project financing, one of the things that they found the most unusual was actually the inability to go on site visits. This is something that is key for them, and particularly key for our team that I work with very closely, that looks at environmental and social risk management. So they're the ones assessing how a project is managing its impact on the environment, how it's applying equator principles, the IFC performance standards, what they're doing to kind of manage any displaced populations, protect biodiversity, that sort of thing. And for them to not be able to actually see these things in person, I think was a real challenge, and took them a long time to get used to the idea of doing this virtually. But apparently has gone surprisingly well. Something that they found actually worked out quite nicely in the end. But I think the thing for everybody is really that the biggest challenge has been being able to kind of get it and it's in that vein of site visits, get really into the heart of something, really understand someone's business, someone's priorities, which you never really get unless you're sitting in front of them in a room, feeling the passion that they exude for what they're doing, and being able to see things. And I think that's something that I personally missed, and it's only just started to come back when I met someone recently who's developing a new project to create elephant grass briquettes, and was able to go there in the room, listen to the guy that's been developing this project for the last 5 years, and hold his briquettes in my hands and feel the weight of these things. And I think that's for me the real challenge, because we can all understand the numbers on a screen in a spreadsheet, but getting that human element, being able to kind of sense that sort of the real passion behind the people who are leading these projects, developing them, and kind of that's the thing that I think has been missing over the last year. And I personally am looking forward to coming back, hopefully sooner rather than later.
Thank you, Oliver. Thank you very much. Mohammed?
So at EGE, it was a very tough year last year. It was the restructuring year, and we've been undergoing lots and lots of changes. But the effect of the COVID actually on Egyptian exporters was good. Most of them were requested to substitute several other suppliers who were in jurisdictions where they had lots of supply constraints. And those Egyptian exporters were heavily requesting from EGE to support them, especially the ones performing in sensitive industries. And that was the most challenging thing. Our mandate is to support them, and at the same time we need to manage the portfolio risk and balance it somehow. But I believe we were able to support them as much as possible, and we've been seeing the figures increasing significantly. And that's what has been making us all proud, being able to support Egyptian exporters to increase and at the same time secure their receivables during such tough timings, made us all happy and proud.
Thank you very much, Mohammed. That was very interesting from the three of you. Now I am coming back to the participants. Do you have any questions?
Do you mind if I ask another question?
Of course.
No, I just wanted to know a couple of things in terms of the financing capacity. As you know, in Egypt right now, mega projects, and we're having a very sort of aggressive moving forward stance when it comes to the projects. So I wanted to know the limits and the capacities that they set forward for the Egyptian market in terms of financing.
Okay, so the question is addressed to the three panelists, I assume.
No, for the UK participants more. How much funds are set aside for Egypt? I know that there's some sort of quota, so I'd just like to know that.
Michelle? Michelle, you are muted. Please unmute yourself.
Sorry, I was trying to find it.
It happens to
Apologies.
us, it happens every time.
Has to happen from time to time. Yeah, sorry about that. Yes, so we still have capacity for Egypt, basically, Hussein. So we have just concluded this mega project. It was 1.7 billion project. However, we are basically seeking reinsurance, etc. So we still have capacity. I can't tell you exactly how much, but we do, and substantial.
That's great. That's great.
Thank you very much, Michelle. So Oliver?
Yeah, I mean, we don't exactly have a sort of set, a set target or a set amount, an amount set aside. But I think for us, Egypt is a market that we are very interested in. We see a lot of potential, particularly from a sustainable point of view. And I think, for us, it's about working out what are the right projects that we want to support that align to our priorities, particularly on the renewable energy side. And really, the things to think about there are who is the sponsor, who's the developers, what's their track record, what's our relationship with them in other markets. But also, what's the offtake look like? Who is it? Is it kind of credible? And I think that's particularly something that we've seen in perhaps India, where there was, cancellations of auctions and things like that. Making sure that that's not something that's kind of going to be a risk factor. So it's really down to the specific projects and identifying those opportunities that are in line with what we're trying to drive as a franchise.
Thank you. Mr. Heba, do you have another question? You'll be more than
I'm good for now. Thank you.
No, thank you very much. Your active participation is much appreciated.
Thank you.
And I think also the other participants, do you have a question to the distinguished panelists? So I see that there are no other questions. So I may have to conclude with an analogy by saying that without project financing, all this development that we have witnessed throughout the recent decades, especially in the global south, on the African continent, and in the global south, which has made a tremendous improvement in terms of projects and economic development. Without project financing, this would have never happened the way we can see now. And we have the example of the monorail project that Michel D talked about and financed by UK Export Finance in Egypt, which will bring a major change to the transportation in the big Cairo throughout the new administrative capital and 6th of October city. So without the role that you are playing, we wouldn't be speaking about this tremendous development with which I have started to speak about in this session. I have to thank the three distinguished panelists and to thank BEBA and the Egyptian British Chamber of Commerce for holding this webinar. And I hope that we will all have the opportunity to meet together again, virtually or perhaps in person after the end of this pandemic, or even during. And we will certainly take care of the measures and social distancing. Thank you, and I wish you a pleasant webinar and with the following session. But I assume that there is a rest now. Nadia, there will be a rest now until 4 p.m.
No, there is a B2B at 3:30, but this is for a particular number of members who have requested to join the B2B. So I guess this is the end. This is the last session. Thank you all. Thank you, Ismail, for an excellent session. Thank you, Oliver, Mohammed, and Michel for accepting being our panelists. And thank you all for participating. And we look forward, and I believe this is not going to be the last event we're doing on agriculture in Africa. We're planning to have a series of events, and we'll definitely let you know. So thank you again, and have a nice evening, and we'll stay in touch. Thank you.
Thank you very much.